Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 7th of August 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, today market marches higher, narrow breadth as always, but the banks and some of the big leaders like Wesfarmers just keep pushing this market higher. So we'll have a look at some of those stocks today. What I really want to have a look at is some of the consumer discretionary stocks. The consumers seem to be loosening their purse strings, don't seem to care. This lady here is, I think, off to the new Mecca store in Melbourne, the new 3-story thing that's going to open on Friday, and I reckon that's probably going to attract a bit of money as well. So these consumers are going to keep spending at the moment, and we're going to look at some of these stocks which are on the run at the moment and doing very nicely for us. Okay, so firstly we're going to get to the trend intensity ratings. Okay, top 10, APE, okay, GDG, Harvey Norman, which has gone for a ride here. You can see that one there. We'll have a slightly closer look at that one later on. MP1, Megaport's doing well. Neuron, PEXA's a new one, as is REG, Regis Healthcare. ResMed, a couple of those health stocks I pointed to a few weeks ago have jumped in there, and we've got 360 in ALQ there. So a little cross section there. Health and consumer discretionary stocks doing nicely. Our stock pick count is up 2. I think we had 3 in and we lost 1 last week. It's about 2 to 56 stock picks for the week this week of 160 stocks that we cover. Okay, portfolios are all full as usual, as you would expect at the moment, and doing nicely, as you can see with the homepage chart. And the overseas markets are still bundling along quite well as well, so we'll have a look at those right now. Okay, firstly, let's go to the Dow Jones. It still hasn't broken its high yet, which is a strange one, but that's just the nature of these beasts sometimes. We can see a few red bars there, so there's been a bit of selling stymieing this one. In fact, we did see on all these indices last week a bit of selling came in and actually pushed the indices down, which is probably a little warning. When it doesn't push it down, it means the buyers are absorbing the selling. But in this case, it hasn't. So if we look at the Dow, it's still nothing to really worry about at the moment. Still above the average. Momentum is good. Just a little bit of selling here is appearing, and we can see the same thing on the S&P 500. Okay, we saw a big selling red bar last week. No big deal. 1 week does not make a market, but it's a warning. Okay, but we are making new highs, as the Nasdaq is as well. It's kicking higher rather nicely and doing pretty well. So I'm not too worried about that there. Then we look at our market, which is all of a sudden it just seems to be marching higher. Every time we think we can have a weak day, it just returns to higher again and makes new highs. So it's really bundling along. And again, some of those leaders like the banks, as I said, like Wesfarmers. There's a few good stocks here, consumer discretionary stocks, some of these big health stocks are all doing rather nicely and keeping this index on the boil at the moment. Okay, still we've got our narrow breadth, as you know, 56 stocks out of 160 is not a huge amount, but those that are going really, really well for us, so that's great. Okay, now we go to look at the commodities. Gold, fine, uptrend intact. It's right on its highs at the moment, so it could be an exciting period there. We've had a bit of selling through here, which has tested the trend, but so far it's standing up pretty well at the moment. Copper, well, it flip-flopped. It flipped and then it flopped, and it's back to where it was a few months ago here, and it's sort of come back right to this range here. The selling knocked it back down, so it's going nowhere. Copper stocks here haven't really done much at all, haven't reacted at all to this, so this really was a bit of an expected fall, I would think. But anyway, that's where copper is at the moment, not doing much at the moment. And Brent crude as well is also, it's trying hard but not really making much ground at the moment, and I think we had a week so far this week. I'm not too sure what happened last night, but it's struggling, it's trying to find its feet, but so far hasn't really been able to unearth a rally of any significance as yet. Okay, stocks. Australian stocks, which we're going to get into, and I want to concentrate on the consumer discretionary stocks because they're the ones that have really been doing very well, and there's probably a couple of opportunities in there. There's lots of things in the market there we can have a look at. You can go to the trading centre and have a look at all the other sectors I'm looking at: health sectors, diversified finance, mining sectors, all those ones. We've got some new picks in. With recent stocks, we've seen PEXA, ResMed, Mineral Resources come in, all doing pretty well. Coming up, I think I've got a transport stock on the boil. 3 miners still coming in there, looking to be ready to go. 1 consumer services stock, healthcare, diversified finance and communications, and 1 bank, which is looking pretty interesting at the moment. So there's plenty for you to have a look at there on the trading centre. But today we're going to look at these consumer discretionary stocks. Firstly, starting off with one we did look at last week. We talked about these moves with Technology One, which is not a consumer discretionary stock, but this moves, look, these impulse drift, impulse moves, which characterises as a bull market. And we just see here with JB Hi-Fi, it's had this impulse move. It just drifted back here a little bit over the last couple of weeks. It's now rallying higher, making new highs at the moment. And again, we see the selling here, which really didn't dent the price. I talked about this before. When I see a bit amount of selling going in there, if the price doesn't move down, it means the buyers are absorbing all that selling, which is a good thing. And now we're seeing this little bump up here, another impulse move. Are we going to get new highs? Well, we're getting new highs. Are we going to get another significant move like this one? Quite possibly. Trend intensity rating is +8 for JB Hi-Fi, and it all looks pretty good. Momentum's quite steady, but it's well above the zero level. The moving average is providing support. All those things we'd like to see with the stock in a bull state. Harvey Norman, I talked about this before. It's come right back up to now where it was $6 back in 2021. So it's crawled its way back from $3.20 in late 2023 to be where it is now, up near $6. And challenging the old highs, which looks pretty interesting here. Natural thing is to tighten your stops as we move towards this new high. Not too tight yet. It hasn't hesitated. Remember, the trend is still the dominant force at the moment until it stops, and it hasn't stopped yet. It's actually looking quite powerful. Volume's been a little bit thin throughout this whole move, so I'm not too worried about that. We've got some great momentum here. It's above the average. Everything looks good. Trend intensity rating is +10, so you hang on to these stocks. This is something to note. The old high, and it's a point of significance for sure, but it doesn't necessarily mean it's going to stop. Okay, so we just wait to see what happens here, and we can start tightening our stop if it does hesitate. But for the moment, Harvey Norman, another consumer discretionary stock, doing incredibly well. Okay, the Lottery Corp finally broke up, as we know. So there's a good cross-section of consumers, betting. Here we'll look at a couple of betting stocks here. So the Lottery Corp is doing okay. It's pretty sluggish, but we've got some good volume through here. Momentum's good. It's above the average. Trend intensity rating is +8. So the signs are all good. It's just perhaps a bit frustratingly slow, but still it is making new highs, and that's what we want to see ultimately. Okay. Then we go across to Tabcorp, another one here, which we haven't looked at for quite a while, but it is now reversing this big downturn that it had here. It was down until mid-2024, and now we're seeing a slow change in direction here. A lot of the consumer discretionary stocks got hit by the Trump tariffs back earlier this year, and they all come down, but they've all recovered pretty well. Tabcorp's making new highs at the moment. It looks pretty good. There's a change of direction happening here, clear change of direction, a good higher low here, a nice upward move here. Volumes here have been quite good on the upside. Had a bit of selling here, which dented a little bit, but the trend is still higher. Momentum's positive. Trend intensity rating +8 for Tabcorp, so it's also looking pretty good. And if we go across to Aristocrat, in the same business, we had a good trend back here throughout 2024. It came down with the Trump tariffs. It's now recovering slowly. We've had a sort of a semblance of a trend reversal here, which we could probably classify it as a trend reversal, but I think I would rather wait until I see this old high taken out. Again, remember, I don't really worry about these price levels because they're not that important. It's more the behaviour that I'm concerned about. So a new high to me is always a signal to rebuy a stock. So I'm going to wait for Aristocrat. Trend intensity rating is +1, so it's cocked and ready. The volumes are looking pretty good here. Momentum's starting to get back on board. It's starting to move above the average again, so the pieces of the puzzle are falling into place here for Aristocrat. Above $75. Around there is probably with a signal to re-enter that stock there. So that's what we'll probably do there. Breville, again, it got hit pretty hard. It had a nice little uptrend here from 2023, and then it got hit. Again, with the Trump tariff, got hit pretty badly, more than most, 38 down to 25, a big drop there. So the drop from January to March caused by the Trump tariff threat, which affected all CD stocks, consumer discretionary stocks, one of the black swan events we have to deal with, and often they do provide an opportunity. Now, we've got a little trend reversal here, which hasn't got trend intensity confirmation for me in this point here. We've got a bit, it's above the average, got a bit of volume here, momentum's still a bit weak there. Trend intensity rating is still -4 for Breville. So again, we're going to wait for a new high to occur here before we jump in and back on this one here. But It has had a big uptrend. The only real move down was this Trump tariff business, so I'm not too worried about that at the moment. It's recovering pretty well. But, again, we bide our time. We don't go crazy. We don't jump in if we don't want to. We're conservative. We make sure all the stars are aligned properly for us before we jump in there. So that's Breville Group. Now I want to have a look at a couple of smaller ones in this area, which is not normally what I do. Every now and then I give you a smaller one. But there's a couple of consumer discretionary stocks I think are worth a look. Firstly, Nick Scali, which it's had a big uptrend. We've broken the all-time high here. It just steadily moves higher, this one, +9. Volumes have been pretty good on the upside, the green bars. We've had some selling here to test it. Always like to see that test of a trend. The selling comes in and the buyers come back in, which means it's a good, strong profile to have for a stock when this sort of thing happens. So it's now moved through the highs and it jumped pretty well from there. It's making new highs at the moment. So Nick Scali is another one that looks pretty good. If I just take you back there, you can see the old high back there, and it's now well and truly through there, so it looks pretty good to me. Okay, the other one here is Auto Sports. Sports is a bit of a misnomer. It's actually more in the car business, distribution, finance, used cars, things like that. But it's an interesting chart pattern here. If we look at this, go back here, you can just see here this trading range has been in since 2021. Highs around 260, lows around 160, 150, 140. Okay, so we had a big trend up here through 2023, the start of 24. It nearly got through here, but we saw the selling start to hit this stock pretty hard and come all the way back down to the bottom of the trading range. It's now having another go. This time it looks significantly different. We've got some good volume following this whole move up here. We've got some great momentum following this move. So it's now looking to make new highs, which is what I do with new highs. I always buy them. So trend intensity rating is +3 for Auto Sports. This is one to watch, I think. It's an exciting chart, and it breaks the new highs here as always. It's exciting for me. Always work with your stop to make sure you're protected, because it doesn't always work. But more often than not it does, and that's the game we play. The odds have been right more often than not. Okay, so that's the Auto Sport stock. And one other little one which I did point my members to a few weeks ago in the newsletter was Qualitas, which is it's more of a fund manager type stock, works in that diversified finance area, but interesting again, simple trading range, up, down, up, down, up, down, then finally breaks. And when it breaks here, I'm just trying to squeeze this volume up so you can have a good look at it. You can just see here this volume that's carried most of this move high here, and very, very good momentum above the average. So when we got the break here, my members got the signal on this one here from the newsletter, and it's now moving very nicely high. It's gone from $3 nearly to $3.80 now, so it's looking very good. Trend intensity rating +10. So simple new highs, simple trading ranges, all the simplicity of what I do. You just have to make sure you follow those signals. Don't doubt, don't worry, don't procrastinate, just follow them. But always work with a stop and you shall be safe. So that's really most of the stocks I've got for you today. I just want to concentrate on an area because it is an area that the market really likes at the moment. The stocks are doing very well. So while the sun shines, we make hay, and so we're catching that wave of momentum in these stocks. And so that's what we'll follow that. Not too worried about the market, valuations, all that sort of stuff. I know we're in reporting season, but I can't worry about that too much. I follow what I do, which is my trends and my little bits and pieces that support the trends of volume and things like that. Okay, so that's all the stocks I've got for you today. Interesting area for you to get into. Keep an eye on some of those good stocks there. In my slides today, I really just want to talk a little bit about, because we now are in a stage where the market's really running hot, or a lot of stocks are running hot. These banks are doing well, Wesfarmers is doing well, as I mentioned, some good health stocks, some good consumer discretionary, some good diversified finance stocks. Not all of them, just a small amount. Sort of weird, I know, but that's the way it is. So that's why we follow trends and we don't look at sectors and things like that, because it doesn't always mean that all the stocks in one sector are going to go higher at once, because they don't. So really, I'm just talking about the psychology of the market, really trying to keep your state of mind in a very steady state of mind. What happens in a bull market, when the bull roars, we can be reckless, okay? We can start thinking, well, this is great, this is fantastic, jump on, and eventually we'll go pear-shaped if you do that. But if you follow your rules and follow your plan, you'll be okay. So when the bull roars, you don't be reckless. It leads to stupid decisions. Often you go outside your plan, okay? And when you do that, that's when your big mistakes are. Same sort of thing when the bear growls. Not that we're in that state at the moment. When the bear growls, don't be scared, don't be fearful, don't be paralysed. It can paralyse you, causing you to miss signals generated by your plan. I love it when I get signals when the market is really down on the stock, because that tells me I get some good leverage, because a lot of buyers haven't moved into the stock yet. It's like getting insider information. When I look at the Qualitas or the Auto Sports chart, things like that, it's telling me there are buyers there buying this stock and pushing the stock high and likely to push it higher. So that information to me is, the insiders can't hide. They've got to show themselves through volume, through buying on the stock market. So you get that picture in there, not always, but when you get that picture there, it can give you a lot of insight into what's going to happen to a stock. So keep an eye on some of those volume patterns and some of those little trends that we talk about there. Okay, so as I said before, this girl is off to Mecca this Friday to go and spend some money, no doubt. She's very happy, as are a lot of consumers at the moment. So it's an exciting time, I think, for the market. Okay, so the newsletter was out last week. We covered consumer discretionary stocks a bit more, looking at those things. Radar's rant, just talking about being measured this week. It's an important thing all the time to be measured and not get carried away with things, okay? So, as I said before, controlling your state of mind remains one of the biggest causes of failings by traders, just behind discipline to follow the rules, okay? Which is almost the same thing, really. It's a healthy and a controlled state of mind that leads to the right decisions being made. Stay healthy, keep good life balance, and the results will flow. So it's not all about trading, it's about keeping your mind in a happy, good state to make the right decisions and things like that, okay? So poring over charts is actually unhealthy, because really you're just poring over trying to find an answer that you want to find, because we all have these biases built in there, and these are the things we've got to get rid of: biases, emotions, things like that. So you need to simply follow a well-devised plan that you've already built, and you know my simple plan is all I really do is look for trends in the market, and I just follow those and new highs. So analysis is about 10% of what I do. The rest is maintaining a healthy and strong mind that follows and implements the strategy correctly, be it a small loss or a big profit. I take losses, no problem at all, but I manage those losses correctly to make sure they are minimised, because I know in a stock market that trends high over the long term, the profits will come, because when you get on the trend, you will get a good trend like we're getting at the moment. Okay, plenty of good trends. So it requires the same robotic process we go through every week, every Friday. I look at my closes, I look at my stops, I look at my entry triggers, and if any of them go off, I execute them on Monday, and that's about it for me for the week. Okay, so it's a very simple process at Stockradar. I had a few guys sign up for portfolio service this week, just talking a little bit about my weekly process, because my weekly process really is not worrying about what happens during the week. I don't respond to price action during the week. I only respond to Friday's close, okay? Most of the stock alerts that go off during the week, the daily alerts you get, are not triggered by Friday. If they are, then I'll execute them on Monday, but most of them aren't. So really, I just take the stress out of it, step back, look at the weekly stuff, and then I've got plenty of time to do other things as well. Okay, so that's all I've got for you today. Looking forward to this week. It's been fantastic. The market's making new highs. There's a lot of new stocks coming on board, hitting the radar at the moment, so keep an eye on those. Most importantly, watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week. Thanks very much.